Good morning, guys. How are we all doing? Welcome to the weekend. I am Dan from Trading with Dan. This is our Bitcoin morning update. If you guys wouldn't mind smashing that like button, we shall go straight over to those Bitcoin 4-hour charts. So yeah, Bitcoin on the 4-hour, we are still wrestling with this resistance stroke support area, depending on obviously whether we're above or below it. But basically with this area, we want to try and get above here, close above here, and then have not much between us here and around 30,000. So anywhere in this zone could be a target, and then we could potentially trade sideways within this range for a prolonged period, and then maybe then go on a bull run. But there are lots of signs indicating that we are at a inflection point in these markets. We do have CPI coming in next week, so that is going to be a big. It's probably going to be a big market mover. But what I would say is it's going to be what we need to pay attention to is the market's reaction to it, how the market trades based on it, not necessarily whether it is good or bad. It's the market's reaction, because we are at a period now where bad news is not particularly, it was not really being bearish for markets, and that is a bottom sign for markets. That is a bottom signaling sign when bearish news doesn't make the market go down anymore. And similarly, it's like a topping sign when bullish news doesn't make the market go up anymore. It's sort of like a bullish divergence, isn't it? As in the news is bad, but it's like a hidden bullish divergence. As in the news is bad, but it doesn't push the price down. So yeah, that is what we are kind of looking at. So with those important levels we are looking at now, firstly we've got the stock market at this level, pretty important level. Break above here, get ourselves a 4,000 handle on the S&P. That is looking good. But the more important ones are, if we go over to the 10-year, the 10-year is getting absolutely whacked here and coming down to this important level of support. This is kind of a bit of a range, but yeah, I mean, there is the most obvious head and shoulders pattern here. If we break below this bull market in the yield, so bull market as in like the sell-off in the bond prices, the bull market in the yield, they're inversely related, will pretty much be over. The 10-year has then got targets down toward, well, here are our targets down towards sub 2%. And what is going to happen in that environment is that the riskier growth end of stocks, Bitcoin, all that fun stuff, all the tech stuff, is going to go on a run. Basically, it's going to continue its bull market. So this is one of the most important factors we are looking at this to break down here. Also kind of tied into this is oil at this important level down here as well. If it breaks below here, that again is gonna it's all kind of, obviously markets are all interrelated, but that is gonna help this 10-year come off, because it is gonna help inflation numbers come down. I mean, there is a half decent chance that even with these crazy inflation levels, because obviously it's a year-on-year comparison figure, that we do at some point in the future, in 12 to 18 months, end up literally with a negative inflation, i.e. deflationary CPI headline statistics. So yeah, if this breaks down here, yeah, markets are gonna certain parts of the markets are going to turn around. Obviously energy is not going to turn around, because that would be what are getting hit. But then we'll have that rotation. We've had obviously the rotation from value to growth. We had growth basically been what everyone was looking at for years, because we are in an inherently deflationary system, obviously with the debt, the demographics, and the destruction from technology. So we are in an overall deflation environment, which is why overall tech, things like crypto, all that stuff, which are future cash flows, have all been just up only. And yeah, we will resume that up only once we get through this, what is literally transitory, but it just depends what kind of time scale you're working on. Obviously the Fed in the US works on a political time scale, which is obviously like election to election, midterm to midterm. But at the end of the day, transitory is just a time frame. I mean, you could think of a lifetime as not transitory, but life is transitory, and a lifetime is a transitory amount of time. So it just depends on your on your time frame. Literally everything depends on time frames. Let's face it. I mean, we all know if you buy Bitcoin now or ETH or whatever, and then hold it for like say 5 or 10 years, we all know it's going to be considerably higher. That is how that goes. Interestingly, talking about that, let's just mug Elon Musk off for a little bit here. I mean, Bitcoin has practically been up only forever, and that guy did manage to basically lose money, even with his shilling influence on Twitter and just generally in the ether out there, just in the existence of the world consciousness. Elon Musk still managed to lose money on Bitcoin. So well done there, you clown. And people literally think that guy's a genius. That guy is a fraud. That guy is a fraud of a guy. But yeah, just yeah, like literally practically the up only chart for all these years of existence. And yeah, he still loses money. Well done that guy. Anyway, that's enough mugging Elon Musk off. Yeah, again with the general bad news for markets. I mean, we even have the President of the United States coming out, who's 80 odd and clearly struggling with health, coming out with COVID, also apparently having cancer, but who knows what is going on there. But either way, not healthy, and markets still, that would normally be a pretty bad have a pretty bad impact on markets, but it hasn't. So like I was saying, bad news is not making the market go down. DXY, well, I mean, this isn't looking as toppy. This isn't looking as reversely as some of the other markets. It does like it can have a pullback. Remember, the 10-year is obviously 10-year dated money in effect. The DXY is right now dated money, and yeah, we could be going into a tough time now. There could be obviously a flight to the dollars. The dollar could strengthen up in the shorter term, but believe me when I tell you, this is not necessarily what we want going on here. I mean, it seems like the Fed is basically well, it seems like the dollar and the Fed has been weaponized in this war against Russia, and there are lots of other casualties of this. Basically, all the other EMs. I mean, we're seeing it in most notably in Sri Lanka now, and that sort of story is going to play out across all the EMs, and the world is just going to basically just be fed up with the US and the dollar, and yeah, and so ultimately where this goes, does it spike up and then come down? Is this a spike up and then the come down? Who knows? But we are probably going to see some sort of a pullback, but this is maybe going to remain bullish for a period of time. What else do we want to look at? Yeah, Ethereum USD looking like a nice bull flag here. We'll see how it plays out. If this bull flag plays out, then we are going to have a very decent move. This is just a rough estimate. We're going to have a, well, yeah, we're going to have a decent move up to literally above these resistance areas. So on the basis it's quite close to this, you would potentially expect this resistance area to be where it gets to, and then maybe plays out some sideways here. Obviously a bullish case scenario, and then again in that bullish case scenario move on from there. But yeah, that is the target. Let's see how that plays out. The Ethereum Satoshi pairing, also a bull flag, also going to have a ridiculous target. I mean, the merge, basically a lot of people thought the merge wasn't going to happen. You get a lot of Bitcoin maximalists out there. Bitcoin maximalists, I think, are about the biggest idiots in crypto. I mean, yeah, just look at the targets of this, at the top of this range, top of this sideways range, very good level to get to. Basically, they have a security budget, which is the Bitcoin that's distributed to miners. That is an ever dwindling amount. They need, obviously, miners to then make money from transaction fees, but you don't get that many transactions on Bitcoin. Even like well, like obviously Ethereum is a big protocol, but there are protocols on Ethereum that make considerably more fees day to day than the whole of the Bitcoin network. Therefore, its security budget is going to dwindle to basically its network is not secure because there isn't use on it, because it's just an idiot boomer coin. It's the Yahoo. It is the Yahoo of crypto. Bitcoin is the Yahoo of crypto, and obviously, clearly, Ethereum is the Google of crypto. So, yeah, there you go. But yeah, so good things on the Ethereum chart. That's not to say it's going to play out like that. We could get a bad reaction to whatever the CPI number is next week. And again, I'm caveating that with not necessarily the number being bad, because we could have a bad number and a good reaction, because like I said, good news is bad news is not necessarily hitting markets any hard. We do appear to be particularly oversold really in certain markets anyway. So Yeah, potential big turning point next week. Like I said, the oil down there, stock market at an important level, the 10-year at an important level. The DXY, whilst I don't necessarily think it's going to fully reverse, it can trade higher than this, but could go on a decent move down for a period of time. Yeah, we could be entering one of those 30-40% bear market rallies. If it is a bear market rally, maybe it goes on onwards and onwards from there. But yeah, we could be entering one of those, of which we are 10% off the lows. So plenty of room to run. So we'll quickly look at those stochastics. 4 hour, yeah, 4 hour still pointing down and coming down. 10 hour, 12 hour pointing down, got a lot of room to run. Daily still pointing up though, and all these higher time frames are all going to be looking great as well. So yes, over the weekend, yeah, I mean, we could just trade, we could drift higher, trade around here, and then yeah, I mean, I guess the market is going to be in a relative holding pattern until we do get the CPI, and then we do see what the market reaction to that is next week. So yeah, there we go, guys. Remember, this is not financial advice. I'm not a financial advisor. Always do your own research, and I shall speak to you guys soon.